When the president of the United States is constantly flip-flopping without really deciding anything concrete, it means investors don't see it as an investment haven and they pull out everything they have and they're gonna wait on the sidelines until things settle.
The problem with data is that you're looking in the rearview mirror to dictate your way forward, but as long as you haven't seen anything major in the rearview mirror, that can sort of lead you and you just sort of incorporate the small little moves that you're making.
Let's say you're a long-term investor and you say, damn, I should have sold. And then the next rally, you're starting to get that fear again. Maybe we're heading into a correction. And then you sell, but the market keeps going up. So it's very difficult to time the markets if you're like a long-term investor.
In this episode, we're going to be talking about three major things: the macro story, what's happening in the bigger picture, and why are the stock markets reacting the way that they are. We're going to look at some technical levels, understanding what the charts are telling us, and last but not least, the psychology and how to deal with the market uncertainty and the panic that comes when you look at your portfolio and you're down 10% on it. Because it could get a lot worse. I have Timothy here. He's going to be helping me out, draw this picture for you guys. And then, yeah, welcome to another episode of Market Buzz. Markets found a little bit of a bottom, but we seem to be giving it away extremely fast. CPI comes in lower than expected, which is fantastic news for the markets, as that gives a little bit of room to the Fed to potentially drop the interest rates. We are seeing the market at oversold levels. Major fear, uncertainty, and down continue to grip the stock market as Donald Trump continues to be extremely ambiguous with what he wants. And the rest of the world is retaliating, with Canada and Europe working together to create pressure on President Donald J. Trump. So it looks like it's not going to end anytime soon, and we definitely got to be paying attention and keep a close eye on these markets, because this can turn ugly very quickly. So you make sure you're paying attention to the news fast and easy. Everybody's freaking out. Many people are panicking. A couple of people are seeing green on their portfolios, but it comes with major fundamental uncertainty. And if the foundation ceases to exist, then we have nowhere to stand on. So we have to be paying attention. There's fear, uncertainty, and doubt, but we're going to try to unveil some of that in today's episode. So make sure you hit that like and subscribe. And remember that our portfolios are down in the comments below if you want to have a look and see what are the companies that we're paying attention to as well.
Come on, Esther, a big smile.
Well, the volatility continues, even though we're bouncing today, right? Like I'm up 2% on my portfolio today, but the volatility continues, right? Like there's just so much uncertainty on big money and investors, money coming in and out, trying to place for the next trade. And we'll try to give you that today. But yeah, I mean, so Timothy, tell me, what's the story of the stock market right now? What do you see? Because I can tell you what I can see.
Yeah. I think we see the same thing. It's US getting less attractive because of the uncertainty, unpredictability. When the president of the United States is constantly flip-flopping from one way to another without really deciding anything concrete, it means investors don't see it as an investment haven and they pull out the collateral, pull out everything they have, and they're gonna wait on the sidelines until things settle. So big money is shifting from US to China, Europe, even India. The question is, will it return within the next few months? Will this year be over? That's something which we can't really predict, but it's important to look at the macro to decide whether you put in money full on again or not. In my opinion, I think we're at least away from all-time highs for, let's say, 5 to 6 months, and that this correction could turn into a little bear market. I think it was Akim in like the previous episodes who already said that this year is probably, the first half year is probably gonna be tough. Certainly because, yeah, you have interest rates already too high and Trump is doing his best, but seems like the Fed isn't too quick to pull them down again, And on the other side, now you have the tariffs that can also spike up inflation and, yeah, do bust to the economy of the US. So you have two factors that are playing a role in deciding whether they should reduce the rates or not. And that can take some time again. So that's really how I see the macro. I'm not sure if I'm missing something.
No, I mean, you're pretty well poised. I mean, you're getting like almost the whole picture, right? Like I would say right now the market is kind of like, I don't know, I like to think of this wall of worry and the things that are sort of in the wall that are sticking right now, and we have major things. Importantly to take into consideration as well is how fast they've come into the picture and how they've all synchronized directly into this sort of like 1 or 2 months. Like Donald Trump has been president for what's it, 40 days, 50 days? It's like not, since January 20th, it's been like a month and a bit, right? And it feels like already like the whole Biden presidency. So because we've had so many interactions with him and everybody's paying attention to, there's that sort of like euphoria that it's like, okay, I'm going to try to get in front of him. I'm going to try to trade Trump. I'm going to try to be paying attention to what he says. So people run out of this, right? Or sort of like, let's say, attention or stamina to pay attention to him, and his words will slowly decay. And they will decay the way that it moves the market. But some of the things that we're looking at, it's like right now, the tariff story, center stage, the Ukraine-Russia war, center stage. We have the FOMC and the Fed center stage, right? We are getting some alleviating data. For example, like the CPI is trending back down again, which is fantastic data. Very, very welcome in a market of uncertainty where everything is just bad news. We've just gotten bad news after bad news after bad news. What does that create? That creates just opportunities, right? Companies that potentially were overvalued or potentially were fairly valued, they become undervalued, and then that's when your analysis comes in and you're able to choose those stocks beforehand. And I like Palantir, I like Nvidia, I like SMCI, and when the prices meet your expectations, you come in and buy them in opportunities like this. Because we're getting so many bad news every single time. A bunch of people sell, and I do think that right now we don't have that many buyers as well, right? The market is very conflicted in saying, okay, this is the moment I'm going to put risk in the table. Right. So yeah, there's UK selling pressure for the increase in capital gains that I see happening as well. And the story hasn't changed too much. The big question that derives from all of these fears and all of this that's happening is that whether the Donald Trump strategy will create fissures in the economy that could create a black swan to pop up. Can we have a liquidity crisis? Could we have the Japan carry trade start taking over again? And those fears start to come in for many investors, and people are trying to front run, right? The potential of anything happen to the economy, right? Do I see a recession happening in the near future? I don't, right? I definitely don't, and I'm definitely paying attention to all of the data that's coming out, right? The problem with data is that you're looking in the rearview mirror to dictate your way forward, but as long as you haven't seen anything major in the rearview mirror, that can sort of lead you, and you just sort of incorporate the small little moves that you're making, right? So I think right now it's like I've held steady. I haven't moved anything in my portfolios. I've kept holding the stocks, and I've actually continued to buy more as we're dipping, because the moment we start getting that train of good news, which is maybe Russia decides, okay, we're going to do a ceasefire for 30 days, which we're closer to now, that can create strong momentum, and then all of a sudden inflation becomes like less of a problem. Then we have potentially Trump receding some of those tariffs. I think somewhat the market is pricing in around 10% tariffs overall going everywhere. So let's see if we can get to that point, or whether the retaliation is going to get ugly. Right now we're in no man's land trying to decide where we are. But right now, because we're not getting any clear direction, it wasn't like COVID that it was like, okay, like we now know that all of technology is going to boom because everybody's at home and we have to use technology. It's not as clear anymore. So we have to understand how the tariffs impact which economies and which ones can we take advantage of as well. So you got to stay nimble, right? You got to stay nimble at this point is what I see right now. for sure. But if you want to go for the technicals, because I know that right now the market did not respect any of the technical levels as far as I know, but we're gonna get to a point where that gets picked back up, because I think the S&P broke through the 50, the 100, the 200, and just barely stayed. There was any resistance or any support at those levels, just because there's just no buyers. Like when you look at volume and such little volume is creating such massive movements. I want to hear your perspective on the technicals for sure. But which technicals do you think you want to talk about today?
Yeah, the thing is with stocks, you already know it's trying to stay ahead of the economy, trying to predict what the economy is going to do. And they always say stocks are moving 6 months ahead of the economy. So what we're seeing right now will eventually be seen in the economy. If we see a bear market, that would mean that in a few months, 3-4 months, we could see the first signs of a recession. So for me, it's always important to look at the charts and see if we're still in an uptrend. Let me share you my screen, and I will go to the chart of the S&P 500, which is like the stock market, the US stock market. And what we see is very simple. We've been going up since, the lows of 2022 in October here. Maybe I can take a brush, and it has been wave up, down, wave up, down, wave up, higher low, higher low, higher low. But now we're seeing like a lower low. So this is for me a first sign that we're seeing a shift in how the trend is going. And that's the reason why I say it's so important to check stocks, because I don't like to hold the speculative stocks in a downtrend. So I might take off the altcoin positions I have, which are crypto, not stocks, but I also have like small cap stocks that I might to cut if we get in a downtrend. And the reason why is because they are so volatile that while the market can drop 1%, they will drop 4-5%, and that's giving too much volatility to your portfolio. You actually want to be in the blue chips in crypto, like Bitcoin, maybe Ethereum, if it's finally doing something. And for stocks, you can go more defensive with, let's say, Lowe's or Pepsi or McDonald's, even stocks that will do good in any economic condition. So I wanted to show the sign I'm looking for an uptrend, which is the 200 moving average. And you said it didn't really respect the 200 moving average.
Yeah, you have the 20.
I have the should be the green. It's not showing on my
visibility, maybe. Nope.
Let me.
It was showing just now. Yeah, that's why. There we go.
Then remove these ones. Now the stocks are below the 200 moving average. So personally, I look at the slope of the moving average. That's how I learned that the market is in a downtrend or not. So when the price is below the 200 moving average, that's not enough. You want to have the slope also turning down, which it's kind of doing. If price would recover and get back above the green line, the 200 moving average, then in my opinion, bear market is still off. It's still a bull market. If markets keep below the green moving average, then the slope will start to go down again. And that means that the trend is down. And you know what they say? The trend is your friend, which means that it's more likely to continue down. And that's a reason to maybe de-risk and get more defensive. So that's my opinion on stocks. Maybe we can look a bit at Bitcoin. It's also below the 200 moving average and having some short-term resistance here at 82 level. I was hoping for stocks to rebound so it can reclaim above $82,000. And I still think market is short-term overbought, so I'm definitely not selling at these levels. So we should at least have a,
So you think they're
short
oversold?
bounce. Did I say overbought?
Yeah, you said overbought.
I mean oversold, yes. So markets are oversold.
That's what I thought. Okay.
So my view is we should at least get back to the K level, have a relief rally, or hopefully reclaim of the 90K level. But if stocks continue to go down, I don't think Bitcoin will survive. They say Bitcoin is like the inflation hedge and everything else, but in theory, what we've seen in history, it's very speculative. So that's what investors are dumping the first to get some liquidity and stay on the sideline. So I don't think Bitcoin will manage to continue higher or make new highs if stocks are in a downtrend. So that's also a reason why I would be defensive if we don't see Bitcoin reclaim the upper 90 range. What's your view? I will stop sharing my screen now.
So right now, the thing is like in terms of the sentiment, right? Like, and I pay a lot of attention to sentiment when I'm talking to investors, when I'm talking to friends, to shareholders, to kind of everybody. And I try to get a sentiment, right? Like in bullish times, people are like, no, should have bought more, right? And like you try to gauge how everybody's feeling, and the feeling that I get right now, and the market is showing this, right? For example, like today we've given up 0.5% in the gains. We could potentially reclaim it back at the end of the day, but what you see is that many people are waiting for that bounce in order to de-risk. So potentially the market came in very strong, into this rally, extremely euphoric, right? We had this sentiment being at all times levels with Trump being the savior of the stock market and he was going to be pro business and everybody was super bullish, right? And now we've gone to the other side of the sentiment, which is everybody is now extremely bearish. Tariffs are unclear. There is so much uncertainty and doubt, right? Which now creates a conundrum. And that conundrum is, okay, if the market bounces and we get to levels that we were before, I'm looking to sell. And you have traders coming in at the end. If you came in at the end of yesterday and you're today, you made 1% in a day, right? So we go back to the idea that Trump seems to be a trader's play. But again, for investors, this kind of hurts, right? Like if we're looking at a 5-year horizon on investments, this is going to be a very small blip in my opinion, right? But if you're looking at the short term and you're like, oh my God, like I was making so much money and now I'm like losing all of my gains, you sort of get scared. And then you say, okay, this could potentially get worse. So whenever it comes up, I'm going to sell. The question is like, when do we get those buyers to fully come in, right? And I think we're starting to see that as the data starts getting better and better, but we need to get a lot more positive data before the market gets to this point. And every single piece of data is so sensitive, right? Like any hint of tariffs becomes a negative day in the markets. And that, like, sure, like at the beginning, right, you can maybe potentially trade that. But then later on, it's like, okay, like we know that they're coming, right? This is priced in. So then the question is how much can the market really price in? Are we in oversold levels like you say? And I do think that we are in oversold levels. Like now, in the grand scheme of things, like I think if we look at the weeklies, right, if we start looking at the relative strength index in the S&P, there is still room to kind of have that sort of like, there's still room for downward pressure. And I right now think it's like, look, like if we can somehow get those buyers to come back in, if we get the tensions to start cooling off, I think that's going to grab people and going to make people actually want to invest money, deploy their capital. If we can get interest rates to come down, that's going to move money from the money markets into the stock market. Not all of it, because not everybody wants to take on the risk of the stock market, but definitely add to the risk appetite of many investors, right? So Interest rates could potentially come down. I think the Fed is ready. In all honesty, I think the Fed is ready that if we see any major shift to the unemployment rate or any major shift to productivity, we could see the Fed stepping in really quickly. And I think that that's what Trump wants. Trump wants to create this uncertainty. So in the case that we see those unemployments rise, the Federal Reserve is going to come in and stimulate. And the beautiful thing is that they have room to do that right now. We're sitting at high interest rates levels for the past 10 years. We're sitting at high levels, so that gives the Federal Reserve room to drop those interest rates to create stimulation. So, again, we are in an okay place, right? Is this a correction? Is this something more fundamental? A recession, something that could destroy capital and wealth? I don't think so. At least not yet. We haven't seen it in the data. We haven't seen it in how companies are reacting. Everybody still so far sees, okay, we're going to see a time of uncertainty. We're hoping we get to a point where it's in the middle. You know, everybody's coming to the table. Everybody's going to have to sit down and agree sooner rather than later. So let's hope that it's sooner rather than later. But again, that's what I see. Talking about the last couple of things, Timothy, what's the psychology, right? What do you do on a day like this? How do you allow your psychology to not get in the way of your investing and your trading on a day-to-day basis? Because when you see the markets come down in a straight line down 10%, it is scary. I mean, I'm not going to tell you that it's, I'm not sitting in my chairs thinking if I had just taken out my money a week ago, I would be so rich. But you got to take those hits, right? Like this moment, and I was talking to another friend, and I said, what are the two things that Trump is teaching you with this? Okay, when you're making profits, sell some of it, keep some cash on the side, because events like this can come. The market can always overreact. You don't know what you don't know, right? So get some cash on the sidelines. Having cash right now, as I'm buying Nvidia at 107 and right now sitting at 113, 114, it's a 5% return in a day. So having that opportunity, that's lesson number one. Lesson number two is what was the other one? I forgot. Number one was
take profits.
Take profits, right? Number two, I can't remember it. I'll come back to it. Until the end of the episode. But until the end of the episode. But that's the thing, right? Like, we got to take this in for what it is, which is like sometimes you don't know what the market can throw at you. And sometimes this was expected. We knew that tariffs were coming. We just had an assumption that the pro-business side was going to beat the protectionist side. But in this case, that did not happen, right? Trump is coming in. So it's like, yeah, if you had sold, but you didn't, so next time it goes up, potentially take some money on the table. And if you're freaking out right now, that means that you have way too much money in risk. That was the other thing. So the second thing is simple. The second thing is the stock market, there is risk. A lot of people for the last 2 years have thought, oh, you just put money in the market and you just print money. That's why Wall Street does this. Oh yeah, that's easy. There's a way to do it. You just grab my money, put it in the machine, and the machine just prints. It's fantastic. Have you heard of this printing machine that the Americans have? It's not the reality. You're putting money at risk. If you put money at risk, it can come down, and you get paid to put your money at risk because you get a return because there is risk, and that risk is coming real. Like it's becoming apparent now, and everybody that's an investor right now understands this doesn't just go up. Stocks can come down. So Trump, thank you. He's teaching the markets. What about you?
He's a good mentor. Yeah, so for your first point, I do have my remark would be, do you classify as a investor long term, or do you classify more as a mid-term trader, or are you more advanced? Do you classify a part of your portfolio to long positions for 5 to 10 years, and then you have 20% in your portfolio for, let's say, quick trades? So that depends on what your plan is in the beginning. For me, I've always said stocks for me are long term. I hold them for many years. You will see my portfolio. I still hold my Google I bought in 2020 during the COVID pandemic. That's when I started on eToro. I still have those positions open, and those are the positions that have grown the most in years. Okay, I also bought Amazon, but I tried to take profits and sell lower, but that didn't work out. I had to buy in higher, and if I just held that position, it would be my largest. Sorry, my earbud fell off. It would be my largest position in my portfolio. So I would say first define what you are. Are you long term? Then okay, you can endure these corrections. The most advanced investors like Warren Buffett, Peter Lynch, Charlie Munger, do you think they sell based on tariffs? Do you think they sell based on some war happening in Ukraine? No. They simply buy and hold, focus on the business, and they see where the business is going. Is it growing in value? Yes, then they hold. But if you're like short-term trades and you think this stock will only follow because things are going up, in the speculative phase, then you should watch the trend. You should watch what the macro is saying, what the Fed is doing, and cut if that position is starting to change in a downtrend. Okay, so that's managing your risk of your portfolio. But another thing you said was like, I should have sold. I mean, those are dangerous words, because let's say you're a long-term investor and you say, damn, I should have sold. And then the next rally, you're starting to get that fear again. Maybe we're heading into a correction. And then you sell, but the market keeps going up. Now you've taken profits too early. So then you can say, damn, I should have held. So it's very difficult to time the markets if you're like a long-term investor. Because mostly what happens, you sell, and then you see the market continue and you're thinking it will drop more, I will buy in later, but it just keeps on going. For me, that's dangerous to just say that to myself, like I should have sold. I am ready to endure anything that comes along. Like if we have a 20% bear market, I will hold my major stocks in my portfolio. I will only cut some crypto positions and use that to buy even more of these big tech stocks, because that's really what I love. Those are my favorite stocks. And then when I see the macro and stocks starting to recover, I will go bigger again in crypto. So that's a bit my way of thinking when I view my portfolio.
Okay, I get you. So right now, it's because that's the thing, right? Like as a long-term investor, you're buying assets, and you're buying assets that you're hoping, like at prices right now that you feel that are overvalued in the next 5 years, 10 years, right? So I get you. No, and the thing is, it's like the volatility is there, right? The volatility will continue, right? So it's something that potentially this sort of shows is, okay, like, look, the stock markets can go up, the stock markets can go, and the beautiful thing also is when markets do come down, you can, if you have cash, if you have an income that you can potentially like reallocate into stocks, you can always buy at cheaper prices and try to get your costs down as well, and increase your positions and all that stuff. No, so I agree with that. Yeah. Like I definitely
for people that say that they don't have cash, then you have to at least put a bit of aside. If you can't, then go watch TV, go watch Netflix, stop looking at your portfolio, because it will only make those emotions even worse. There's nothing you can do. If you're a long-term investor, all you have to do is wait, have patience. But at least try to have like $100 a month to invest a bit in the stock market, obviously.
Yeah, it's interesting because a lot of people, I think that this is a sentiment that a lot of people on eToro follow, and it's like, yeah, I'm a long-term investor, but I look at the stock price on a minute-to-minute basis. It's like, bro, you're not a long-term investor. You know what I mean? A long-term investor buys and holds it. It's like, like I have a friend that does real estate, and he says, like, what's your secret? And he's like, look, like I choose a city, I do a 1 kilometer radius from the center, and I buy there, and I wait 10 years. It's like, like that's the strategy. Pretty much, it's like, you find a good company, put it there, hold 10 years, right? And that's where, it's like you got to know what you're buying and having the certainty, because I agree with you. Like there are risk assets that you might only buy when you feel that there's an upward trend. Like, for example, like I do have a couple of positions where I did get cut out. I don't just get it wrong, but in my own personal portfolios where it's like NVDL, like a 2x NVIDIA trade that I have on, a TQQQ, a triple QQQ position that I have. UPRO, it's like I'm buying those positions into this dip because I think potentially they could continue to go up, but I'm very closely monitoring those positions in order for me to say, okay, maybe I was wrong. I don't think I am wrong. That's the reason I'm still invested. You know what I mean? But then my long-term portfolio, barely any changes, right? Like I'm getting my dividends from my portfolio. I'm getting my, like, if I move a position in my long-term portfolio, very, very unlikely that I do. But if I do, it's because something has change within the foundation of that company that makes me actually think, okay, they're not going to be able to deal with this, because they're it's like people in those companies tend to be the best people performing in those industries. If I choose the best company, if I choose an NVIDIA, I'm sure that they can handle rise of prices or supply chain constraints. All of these different things are able to maneuver around those issues because they've shown they've been proficient at it before. Competency, what's the word?
I don't know.
Competency, yeah, whatever. But yes, right? So it's like you have to trust the management, you have to trust the company, you have to trust what they do, and your research. Usually, like that's one thing, like it's like a lot of people, like for example, even when the market goes down, I'll sit in front of my computer looking at the market, looking at those numbers, when the reality is like, hey, am I planning to sell right now? Like, am I really gonna sell? No, then get out, right? You should look at your portfolios in moments like it's like, okay, let me just double check, see everything is going okay, there's nothing major, and if you're really scared of a position, put a stop loss. You know what I mean? Even though I don't use them, but that way you kind of like take it out of your mind in a sense. But yeah, but if you're too scared, also it tells you one thing: you have way too much money inside. If you're worried about whether you're gonna eat or pay rent this month because then you have way too much money in the stock markets, and that's not okay either. Anything else you want to add, Timothy?
No, just patience will be the word of the year. Try to ignore a bit also the news if you're a long-term investor. I mean, it can be a roller coaster. Focus on the business, if the business is still doing great, I mean, long term you have no worries, and that's the point you're saying as well. Within the 5-10 years, just focus on the business. These tariffs, I mean, it's not the end of the world, so the business will keep growing, and that you wanna focus on.
That's the truth. That's the truth. By the way, don't forget to hit that like and subscribe. Leave us any comments. What do you see in the markets that we are missing? What companies you want us to analyze and take a closer look? Any comments that we have in the video, I'm more than happy to answer to, and I'm sure Timothy is as well. Make sure to check out our portfolios to see what we're investing in and the companies that we truly believe in. Thanks so much for watching, and peace out.